In this video, we are going to analyze a Euro-Dollar 5-minute chart to see how the concept of the fractal bar can be used to pinpoint good trading opportunities. The first thing we need to observe about this chart is the origin of the horizontal blue line, which comes from the last significant high we can see. It is important to mark this last significant high as price approaches the same level again. One interesting thing to notice in the way price rises to the blue line level is that price produces minor higher lows almost exclusively. This is a sign of orderliness, and it can mean that large traders are purposefully driving this market up with a specific agenda. When price finally hits the blue horizontal line, a few interesting things happen. First, notice how price pierces the blue line with the upper tail of the candlestick marked by the red arrow, but it never closes above the line. That's an interesting fact because it shows that buyers in this market were strong enough to violate the line, but the sellers were stronger and were able to bring the close of this candle to a level below the blue line. Another important aspect of this candlestick marked by the red arrow is that it is a fractal bar, which means it is a candle that displays the momentum asymmetry between two timeframes in one single candle. This is one of the hallmarks of the fractal flow strategy. The appearance of a fractal bar in a trading context like this one can mean the possibility of a high-quality trading opportunity. If we look at the very next candle after the fractal bar marked by the red arrow, we will notice a few important details. The first detail is that volatility decreases, and price creates an inside bar. The candle after that displays a dramatic increase in volatility. All you need to do to perceive this shift in volatility is to compare the size of the inside bar and the size of the candle that happens right after it. Perhaps most importantly, the candle that shows volatility increasing is also a bearish candle. Notice how price action is telling a story that is logically consistent. Price hit an important level marked by the horizontal blue line, then it pierced it and failed to close above it. The candlestick that failed to violate the blue horizontal line happens to be a fractal bar, which is immediately followed by a brief decrease in volatility. Right after the inside bar, price shows an increase in volatility to the opposite direction that price was going. On top of that, we have the orderliness in the way price went up to the horizontal blue line, which can be interpreted as a fingerprint of large traders driving the market up intentionally. At this point, our trading context has enough elements to form a high-quality trading opportunity. We could open a sell trade in the opening of this bar with a stop loss right above the tail of the fractal bar. An important thing to notice is that we have enough room to produce a good risk-reward of at least 1 to 3 if we put our take-profit target in the last low marked by the red line. However, the intention is to let price go lower near to the last significant low marked by the green line. If sellers are in control of this market, which is what our context is telling us so far, price will have no problem going to the level marked by the green line. However, price has one major barrier of buyers before it can hit the last significant low marked by the green line. This level is marked by a zone of buyers that come out of the moment in which the buyers proved they could pick this market up. That's the case because price was making lower highs and lower lows in the minor flow, then it made a higher high, pierced down the last minor low and broke up. In other words, this is a zone where a big decision was made in the market and we can expect some buyers to show up at that level to create a barrier. If we are correct about the downward flow of price until the significant low marked by the green line, we can exploit this bump in the market to enter a second trade down or to enter a trade in case we missed the first opportunity after the fractal bar in the top of the chart. Let's see how the market develops. Price touches the important zone that we have been talking about, and it does so, producing an interesting looking candle. If we look at the relationship between the candle body and the candle tails, we can deduce this is a moment of indecision in the market. That happens because we clearly have a downward flow meeting the level where the last significant upward flow really began. This is a moment where we need to decide which one of these market flows is stronger. It is important to notice that we have some sort of context to place a buy trade here, but we don't have a good place to put a stop loss, and we also don't have enough room for price to go up. That's the case because we have an outside bar pointing down, and the tail of this bar also has a hybrid momentum asymmetry, which is a strong indication that sellers are decided to bring the market down again at this level. Another important observation that can be made here is about the angle of this new downward flow. If we measure this angle and extend it to the high that began it all with a sloped frequency line, we have a line that might be used to trigger another sell trade if other criteria are met at the same level. Notice that the zone of hybrid momentum asymmetry that comes out of the outside bar shows a highly suggestive place to put a sell trade, and it coincides with the down-sloping frequency line. Let's see if buyers hold their strength or if the sellers are powerful enough to go to the next barrier. Price begins to rise again. Notice how orderly this upward movement is. This is a classic sign that large traders are purposefully driving the market in one direction with clear intent to confuse retail traders about the right direction of the market. In this moment we have an interesting situation with many converging elements attached to it. We are right at the zone coming out of the outside bar that shows a hybrid momentum asymmetry. Price has also touched our down-sloping frequency line perfectly while it is showing a first-degree momentum asymmetry between these two minor highs. Beyond that, price went up to this level in an orderly fashion, which might be an attempt to confuse retail traders about the overall direction of the market. The touch of the down-sloping frequency line or the next bar opening would be the correct place to open a sell position with a stop above the fractal bar at the top of the chart. Let's see how price behaves in the next candles. Price goes directly to the green line, which is precisely placed inside the supply and demand zone of where the last significant upward movement began. This is also a place where we have stronger buyers that might be able to keep up with the current flow of sellers. Notice also that in this level, price is beginning to decrease its volatility and it is forming another fractal candle. That's a perfect scenario to place a buy trade because we have a few different contextual elements to sustain the trade, and we have a very good place to put a stop loss order, which would be a few pips below the last significant low. Price starts to go up and it oscillates in a way that we can tell it's being produced by retail traders slowly picking this market up. The market is rising to a level where four different contextual elements meet. The first element is the minor high that was zoomed by a wide range candle. This represents a tipping point where price might be attracted to in future states. The second element is a zone in which we can observe the outside bar that has momentum asymmetry, which already proven to be a valid level. The third element is the first-degree momentum asymmetry happening right at the down-sloping frequency line, and the fourth element is the turning point line, which shows the minor low break level. If price meets this level and it starts to display the correct contextual elements, we can think about a sell trade. Once again, we hit the level where many contextual elements converge, and at precisely the moment where price touches this level, it produces another fractal bar with an increased level of volatility. This candle is the final nail in the coffin to take this sell trade. Beyond all the contextual reasons to take the trade, we have a very good place to put a stop-loss order and a lot of room to go down if this proves to be the place where the stronger sellers take control of the market. As you can see, price starts to go down aggressively in a nice volatile movement. If you combine all the potential opportunities of this chart, you could make around 80 pips of profit with very precise entry and exit points. If you want to understand more about how to identify fractal bars and how to identify the correct ways of pinpointing momentum asymmetry in the markets, check out the fractal flow strategy in our strategy store by clicking in the link in the video description. By purchasing the strategy, you will be able to understand how to apply all these techniques in a clear way along with specific rules for risk management and trading psychology. You will also have access to private email support to solve any questions about the strategy. If you enjoyed this video, don't forget to subscribe to our channel and to leave your comment and your like below the video. If you have any questions about the markets in general, you can also contact us by email at any time and we will answer as quickly as possible. Thank you very much for watching and I hope to see you in the next video.